So many sectors have had such strong gains since the August 5th lows. Healthcare, for example, is up 5%. Financials up 8.2. I'm dropping below tech, obviously, which is the leader at 18, but discretionary is up 11.3. And Josh, on this note about the financials, you have JP Morgan 10 days up, right? Into Monday. The last 10-day streak was in July of 23. And you have a new stock on your list, something that you just bought. It's from the financial space, not a bank, but it is PayPal. Interesting. Why?
Yeah, so I bought it in the pre-market on the news that Adyen is going to do a huge partnership with PayPal's Fastlane service. I like, as you know, when the fundamental news lines up with what we're seeing in the technicals. And PayPal hit our list at the end of last week of the best stocks in the market. Technically speaking, this stock is now above its prior 52-week high. And it's been a really long time since there's been anything positive to say about PayPal. And I have lost money in this name before, so think twice before you follow me into it. But they have a new CEO, and the new CEO is making incremental moves to improve the fundamentals. We've seen that in the last couple of quarters. And now we're starting to see big partnerships. And I think that's why the stock has been breaking out. The other thing to keep in mind is Apple. And Apple, by the way, is the bête noire of this story. Apple Pay has just absolutely trounced a lot of competitors on wallets and payments. Apple has just preemptively opened up its near-field communications, or NFC, system so that you can tap to pay, and this will include Venmo. So having Venmo as an option alongside Apple Pay when you push your phone up against a merchant screen is something new. The axe on this stock is Dan Dolev at Mizuho. He went positive on the stock after having been negative for a while, and the story here is now changing. PayPal is, I think PayPal has a very hot product in Fastlane, and if they can gain back some more ground on all these payment solutions, it really changes the fundamental outlook. So it's a technical breakout. I have a relatively tight stop. I don't trust this name, but I'm in it, and I love it when the fundamental story is improving as price action is confirming.
Carrie, this thing was in no man's land, penalty box for a long time. You used to own it, didn't you?
As a matter of fact, I remember the last time that Josh bought it because we had sold it. Yeah. And I wish Josh luck. I mean, there's a lot that
Carrie.
could go right. But yeah, I do. I remember. I think if the market holds up, if retail holds up, it's good for PayPal. That's what it needs. It needs not just partnerships. It needs people to keep spending on their platform.
Yeah. So, Steph, all this news about Buffett selling Bank of America, selling the stake down. You've been a buyer, and you're a believer in financials. Do you think there's momentum in that sector moving forward here with all that lies ahead?
First and foremost, Buffett is still a 12% owner of Bank of America, right? That's number one. Number two, earnings. To the point of you guys were talking about broadening out in the market, financials grew earnings 17%. And by the way, discretionary, 31%. Healthcare, 17%. So there's no wonder why we aren't seeing this. We are seeing this broadening out, right? I mean, that's the whole point, is that earnings are doing better than expected. I don't care. You talked about 5% revenue growth for the overall S&P, and that wasn't great. But I'll take 5%. That's about a 2.5% GDP world translation. And you're seeing margin expansion, which is why you got 10% earnings growth. So to me, that's the exciting part. That's why we're seeing the broadening out. Back to B of A, it's trading at 1.5 times tangible book. I think it can get to 1.9 times because net interest income is 50% of their revenues, and with interest rates coming down and them repricing their bond book, I think you're going to see something like $63 billion in net interest income by 2026, net interest margin expansion as well, fees coming back because the last decade they got hurt because they reduced their mortgage book. So that goes away, and they're seeing investment banking fees at the same time. Expenses are growing GDP kind of plus or minus 1%. I think you add it all up, it's a very cheap stock. So I like it. I'm overweight financials, and I've been very pleased with the rally in the sector.
So you've been pretty opportunistic. When 2 weeks ago Monday, when crowds were running for the hills with this panic attack over the economy and the unwind of the carry trade, you were a buyer. So now that we've had a huge snapback, how does that influence your decision making now?
Less buying. Less buying. We've had a heck of a run back, right? But I'm still a believer. So maybe September is volatile because it historically is. And if it is, I will be back buying because I had stocks like Eaton and Lam Research, Bank of America, Truist, CrowdStrike. So many names came off double digits. I mean, Lam Research was down 50, because you own it, down 15% in 2 days on no news after they beat and raised. So I was opportunistic because I didn't think it was a credit problem. Obviously, carry unwind, the yen carry unwind was a big deal, and it was surprising, the moves, but I think that gave you the opportunity because I go back to the economy, and the data has been pretty good. ISM services were better than expected, new orders, employment, initial claims, retail sales. I mean, we're not falling apart. And no, I go back to your comments about your clients being worried. I think they're worried because interest rates are still so high, and that does it last? Is it going to be a soft landing? For now, it is a soft landing supported by earnings.